Hi, everyone. Today, let's talk about Deutsche Bank and their potential default. Then we'll go over Max Payne. Then we'll go over the charts. Then we'll go over my results and my thoughts going into Monday. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open, as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So Deutsche Bank has been struggling. They have a lot of exposure to CDOs, and for 3 days now, the stock has gone down, and they've lost a fifth of their value this month so far. They say the stock was down 14% at one point this session, and trimmed its losses, closing down 8.6% in the afternoon. So the stock definitely struggled. There's certainly some risk here. Like I said, they have a lot of exposure to CDOs. And if you've been following the news, you know that there have been some defaults, and some banks are starting to go out of business, and some others have needed some additional liquidity to stay in business. They mention here that this is somewhat of a fallout from the Credit Suisse situation. Some of their bonds were written down as part of the rescue deal, and Deutsche Bank also has some of these bonds, which obviously is going to damage their balance sheet. It is worth noting here that Deutsche Bank has reported 10 straight quarters of profitability after completing a multi-billion-dollar restructuring in 2019. So there certainly could be a little bit of an overreaction here from the Credit Suisse situation. They seem to be doing quite well in terms of profits. You can see net income of about $5 billion in 2022, up 159% from the previous year. But it does seem like they might have some exposure to some toxic assets that could bring the bank down, at least in the short term, until they potentially write off some losses. There's no indication that they don't have enough liquidity to cover their losses or to cover any withdrawal requests. This was a big enough issue for the European Central Bank to come out and say that everything's all good, don't worry about it. But there's certainly risk here of spillover as we continue to worry about potentially more banks across the world going bankrupt. Moving over to Max Payne here, you can see they say stock price of $395, but I think we finished a little bit higher than that, $396. You can see $396, perfect little spot right here. A few calls make a little bit of money, but all of these puts end up worthless here. Put call ratio was 1.92 going into the day, with about 1.5 million units in the markets. So not a ton here, but it's worth noting that this ended up being pretty much perfect in terms of an end of week finish. And just to highlight, next week we have the same Max Payne, quite a bit more units here at just over 2 million. 2.66 is the put call ratio, and you can see 390 is that highest put level here. So we might see the SPY go down a little bit over the course of next week. And then we have 400 and 410 being high levels on the call side for next week as well. Moving over to the charts, starting with the S&Ps on the 15-minute and the 1 hour, you can see here we gapped down really strongly, filled the gap, continued rallying. On the 15-minute chart, it pretty much looks straight up after this slight double bottom that we had. Similarly here on the hourly chart, we got back up into those resistance levels. RSI still looks strong, momentum still looks strong. Close to overbought here on the 15-minute, so maybe we see a short-term pullback to about 394. That would be interesting. But right now you can see we're above the major trend lines, looking to retest these previous highs up around 398, 399. And then we have resistance up here again at 401.50, which was the resistance here going back to Wednesday as well. So markets look strong. We talked about that yesterday. This end of day rally that we had after this double bottom was really aggressive, tons of volume. We talked about that potentially being an area where we could find some support. We ended up gapping down, rallying through that area, and looked good pretty much throughout the day. Moving over to the NASDAQ here, I just want to highlight the 5-minute chart for a moment. You can see just how choppy this was, and I pretty much got destroyed in this area. So this was some chop for sure. The 200 SMA was resistance for a while, continued to throw really strong down moves. And you can see this wasn't even a clean double bottom. Looking at yesterday a little bit, you can see we did gap down, but these lows from yesterday held. But this low here today, which did test that previous low, was a lower low from the previous little dip that we had. So really, this was some pretty tough trading in here. I definitely got chopped up in there quite a bit. Was able to make a little bit of it back on this rally that we had. You can see the 21 EMA here holding really strongly on the 5-minute chart. Pretty much throughout the day, that level held And you can see at the end of day, we had a really strong push up to 311. Again, tons of volume on that last 5-minute candle, pushing above the previous highs. So it looks strong going into Monday. 15-minute chart, similar thesis. 9 EMA held throughout the session after we got above it here around noon, and then rallied throughout the day. Momentum strong, close to overbought conditions, similar to the SPY. Moving over to the Russell and the Dow. Similar to the SPY, we gapped down, made a new low, and then rallied to fill the gap and then make a slightly higher day. Same thesis here on the Russell. Tested that support level, rallied pretty much throughout the day, all the way up to 172 at the close. Pretty surprising after how low we were. I ended up rolling those options down, but I opened a new put for Monday, so we'll talk about that in positions here. But right now, hourly momentum on both charts looks good. Hourly RSI looks good. Looking to that 200 SMA here on the Dow sitting up at 325. For the Russell, we have the 55 EMA at 173.45, so we'll be looking for that. Also, we have resistance here at 172.76, so usually you look at the deeper level, but certainly could get some resistance here as well. And then just behind that, we have the 144 EMA at 175. So multiple levels here for resistance on the Russell. But right now, you have to respect the movement that we got today after the high volume that we got the previous day. Moving over to Apple and Tesla here, you can see we rallied into the close for Apple. Slightly up day, but just by a little bit. Did not make a new high from yesterday. Looking to push back into that 162 level right at resistance once again. Also testing the wick from Wednesday. That's my price target here. 55 EMA on the hourly chart continues to hold. Momentum and RSI both bullish. Moving over to Tesla, much weaker. You can see the gap down, made a new low here through some wicks through that 188 level. Zooming out here a little bit, you can see that is the dip that we had going back to early March and the lows here from mid-March. So it makes sense that we're finding a little bit of support there. Pretty interesting. Looking at the volume, if we did fall through this level, the next level of support would be down around 184. And this looks pretty weak here based on what we saw. We didn't fill the gap. Looks weak at the close. Tesla generally looking weak going into tomorrow's session. Respect a little bit of upward momentum, moving in the slightly bullish direction, but I wouldn't expect this to get above 192. Definitely not above 193.50. So watch those levels. It looks more like Tesla's going to roll over, probably in the mid-session, and then potentially come down and retest the 200 SMA, down around 185.68. Moving over to Alphabet and Meta, you can see Meta continuing to rally. Looks good. Momentum starting to fade here on the hourly chart, though. RSI kind of neutral. Momentum on Google, however, starting to fade a little bit more strongly. You can see we've been flat for about 3 days now, and if you're not rallying, especially after a move like we've seen, there's certainly potential for a pullback down to this 98, 99 level. We haven't seen that break down yet, and we're not below the 55 EMA quite yet. Certainly going to be some support down here at 102. But right now, Alphabet is in a holding pattern, and it looks like somebody is probably selling a position, in my opinion. Moving over to staples and discretionary here, we actually have a really strong divergence. So looking at the 4-hour chart, you can see we have two big green bars here on staples, moving much, much higher, retesting the 144 EMA. Talked about that level yesterday as an upside potential. If we do rally through that level, then we're looking at 73.73 at the 200 SMA, just above there. It does correlate pretty nicely with these previous highs going back to the end of February. If we get to that level here and discretionary is still sitting in this low or starting to break down, that's going to be a pretty good indicator that maybe markets are looking to break down a little bit further here. Of course, this is early signs and discretionary has not broken down completely, but we're moving into slightly bearish territory, and this is a pretty clear divergence between the two compared to what we've been seeing here recently. So keep this on your radar. We'll talk about it more on the Sunday video. Staples starting to outperform a little bit more strongly than they have been recently. Moving over to oil and gas and financials here, you can see oil and gas did have a slightly bullish day. Momentum did pick up a little bit, so that's interesting. But looking at financials here, you can see we gapped down, filled the gap, and then stopped right at that level. This looks slightly bearish, sitting at the 9 EMA here on the 4-hour chart. If this is going to roll over some more, that's going to be interesting and ultimately would point to lower prices, in my opinion. It's worth noting that pretty much all the major indices look bullish here, but we're definitely seeing some rotation into and out of certain sectors. Moving over to transportation here on the 1 hour and the 4 hour. Similar to everything else, we gapped down and rallied, closed slightly bullish on the day. But looking at the 4-hour chart, similar to financials here, this looks quite weak, still below the 9 EMA. It almost looks like this is rolling over, looking to accelerate into Monday and potentially Tuesday. So keep this in mind. Financials definitely not rallying nearly as much as the major indices and starting to create that divergence where we see transports not participating in the rally. That means that could be a little bit of a false rally into the Monday session. Looking at the 2-year and the 10-year just for a moment, you can see we continue to throw wicks through this lowest level. It continues to hold here, but looking at the 2-year, you can see wick here previously was actually slightly lower than the previous one, continuing to look like we're going lower on the 2-year. 10-year is still holding up fairly well, but if these start to roll over a little bit stronger here, that's going to be pretty concerning. But for right now, we're still holding up. Looking at RSI on both of these charts, still looks weak though. We did have a lower close here on both charts, but the 10-year did test this previous wick going back to Monday. So looks weak, but not breaking down all the way quite yet. Moving over to the dollar here on the 4-hour and the daily chart, continued that rally that we talked about yesterday. Looked like a solid bottom, got the continuation, so that's interesting. Did have 4 candles of slightly bearish movement here, but momentum still bullish. Looks just a short-term retrace after the strong push we had here on the 2 o'clock candle. Daily chart moving into bullish territories. Got that initial crossover, looking to retest the SMA on RSI. Wouldn't expect any major resistance until we get to that point. Looking to close at least up around resistance here at 103.64. Otherwise, 0.5% update on the dollar. And if this reversal holds a little bit stronger here, that could be pretty bearish for equities going into next week. Moving over to JNK here, you can see not really participating in the rally either. So we gapped down similar to everything else, did not fill the gap. Looking at the hourly chart here, you can see we got a little bit of a down move at the end of day. RSI on both charts points to a little bit more downward momentum, but we do have a low and a slightly higher low here potentially as long as this holds. See a little bit of a pullback and then maybe we see a nice little rally up to 90.58. That would be interesting. Retesting the 144 EMA on the hourly chart. Certainly possible still, so keep in mind slightly bullish movement here, but we did have a bit of a blow off top that you have to be aware of, and then we had a big down day yesterday. And similar to transports, JNK is just not participating in this rally the same way that we're seeing across the major indices. Moving over to the VIX here on the 4-hour and the 12-hour, you can see we pretty much sold off throughout the session. Talked about that being a resistance area around that 25 level. Certainly did get resistance there and sold off. You can see the wicks here on the 12-hour looks bearish going into Monday, so keep that in mind. But a rally in Monday and Tuesday does seem like it could be short-lived, depending on what we see on transports and JNK during the Monday and Tuesday sessions. Moving over to my accounts here, you can see I made a little bit of money on my IRA, as you would expect. The IWM did rally. And looking at those positions here, both of those accounts made money. I did roll down to the 170, which ended up costing me a little bit of money, but you know, a profit's a profit. And I did enter a new put position here down at 170 to re-enter for a 72-cent credit here. Looking to buy a little bit under that 170 level, or if we just get a rally, I'll keep that credit. That'll be fine. Moving over to my Q position, you can see I ended up rolling up to 309, which was fine. Ended up being profitable here. And then I sold another 309 put here for $1.07, which is in a small profit as well. I think I'm going to continue to focus on swing positions. Of course, I do have to do that because of work here at this point. I'm not going to be able to actively trade as much as I had been, but I do need to refine my day trading strategies anyway. So focusing on the wheel strategy, continuing to do that seems to be profitable, at least in the short term, and continuing to work on the Qs and the IWM. In terms of thesis, for Monday, still expecting a little bit of continuation on that rally, but it might be a little bit short-lived depending on what we see on transports and JNK. If we start to see stocks rally and JNK and transports starting to fade, or we continue to see divergence between consumer staples and discretionary, probably a pretty good indicator that we might be looking for a little bit of a steeper drop later in the week. Let me know down in the comments section what you thought of the markets today. Pretty mixed, but fairly consistent through the mid-session. Surprising amount of volume and rally in the market still after the Fed announcements. Is it going to hold up, or is this just a short-term retrace before we get a little bit deeper down move? Let me know down in the comment section what you think. Of course, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.